Hello friends, welcome all of you. Today we discussing on auditings. This is subject of the BCom third years. So objective of the learning auditings is that we come to know exactly how to verification is going on. Nowadays the importance of auditing is very much not only the financial but every area for the internal purpose and effective and efficiency in operation levels. The day by day importance of the auditing is going on, so it is a very good things for the third year student can be learn the auditing subjects, and it is a very useful into our day to day lives and all the things. So here we should be learn the auditings of financial statements. So we just recall of our after the 10th we have to admit it in the commerce teams. It is a very good decisions, and that is one new subject we should be learn accounting subjects. Yes, in the accounting subject what we should be learn, that is golden rules, debit and credit rules, and personal rules, real account, nominal accounts. On that accounting golden rules we have to prepare the generals entries from the basic sources vouchers, and that voucher can be posted, vouchers entry posted into general, and general entry can be posted into the ledgers, and ledgers at the end of years it can be transferred to the trial balance. On the trial balance we prepare the trading account, profit and loss account, or income statement, profit and loss appropriation account, and balance sheets. So as per the requirement of the accounting standard and Indian AS, so here we should be prepare the statement of profit and loss account, and then we should be prepare the balance sheets, and then show key statement change in equity. So these are the just parameters for the accountings. Here the when accounting is end, auditing is start. Means all the transactions we have to maintain or recorded it is a true correctly or not. For that purpose we have to make the auditings. So let's we should be just touch how the auditings can be start. So first we should be go for the origins of the auditings. The audit words derived from the Latin words adduce, means here authenticity of account is assured with the help of independent review. So friends, one word we should be always kept into the minds, that is independent. What is the meaning of independence? When the persons who become auditors or who have to be appointed for the any company, he is an independent persons. So how he become an independent? He is a, if suppose the person's relative in the company, he is not eligible as per under section 141 of the Companies Act. It is a disqualified person to appointment as an auditor of the company. So persons who is a independent mind and appearance is important. Yes, when he should be conducting or undertake the audit of the any company. So if you are to take the example, if someone brother is a managing director or CEO, whether the appointing brothers can be eligible? No, it is not eligible, because he should not be express opinion as independent. Some influences comes on the minds, so it is a better way. It is a disqualified as per the one under section 141 of the Companies Act, and its person is not independent. That's why he should not be a just a review and audit of the. So audit is nothing but the just ascertaining the record whatever the maintained by the company, and to find out that it may be a correct or not, it can be checked by the auditors. So auditor check the internal control systems. If suppose the internal control system is quite good, so auditor may realize that the uh, whatever the recording transaction may not be prejudiced, may not be malpractices, may not be errors, or may not be a frauds. But auditor is a always alertness, and he should be a kept in the mind that may be a possibility there is a fraud in existing to the company or organization, whatever the audit he should be undertaken. So he just make audit so far as concerned as a subject of years financial audit is there. So here we should be just make the verification origin of the transaction, that is vouchers to ledgers or voucher to general and ledgers. So whether each can be posted as per the rules of accountings, that is recommended by the Institute of Chartered Accountant, and same can be recommended by the central governments. Yes, nowadays every company the phase in coming soon days, the every company can be adopted to the Indian accounting standards. Now AS may be applied. So Indian accounting standard is a congruence of the international financing reporting systems. So here the accounting reporting framework some extent level can be a change due to the global impact on the Indian business markets. After the liberalizations, so many multinational companies come into the India and just making the international standards. So in the Indian businesses also just maintain the accounting as per the international demand. So basic rule is never change, but some reporting extent levels, the present value method should be a comes, and according to we have to prepare the financial statement not only for the years, but the every company try to that maintain the financial statement as per the requirement of the internationally uses. So now we should be see the definitions. So first of all we should be go for the definitions. So that is a definition of the larvans RDK. And auditing an examination of accounting record undertake with a view establishing whether they correctly and completely reflect the transactions to which the purport to relate. Next definition is auditing is defined as an investigation of some statement figures involving examination of certain evidence so as to enable an auditor to make report on the statement. That is definition of Taylor and Perry. Next definition, FRM DePaul. He defined an audit denote the examination of balance sheets and profit and loss account prepared by others together with the books account and vouchers relating to thereto, such in such a manner a report that in his opinion such balance sheet is properly drawn up so as to exhibit a true and correct view of the state of affairs of a particular concerns according to the informations and explanation given to him and as shown by the books. Next definitions, Professor Montgomery, according to him, auditing is a systematic examination of books of records of business or others organization in order to ascertain or to verify and to report upon the fact regarding its financial operations. So next definition we see Spicers and Pegler. Auditing such an examination of books of accounts and voucher of business as well enable the auditors to satisfy that balance sheet is properly drawn up and give a true and fair view state of affair of the business and the whether the profit and loss of account give a true and fair view of profit and loss for the financial period according to the best of his information and explanation given to him as shown by the books, and if not what respect is not satisfied. Next definition, RG Bose. Audit may be defined said to be verification of the accuracy and correctness of the books of account by an independent person qualified for the jobs and not in any way connected with the preparation of such account. And next definition, A.K. Chandra, audit is not an inquisition and its mission is not one fault finding. Its purpose is to bring to the notice of the administration's lacuna in his rules, regulation and lapses, and to suggest possible way and mean for the execution of plan and project with greater expedition, efficiency and economic. So friends, we see for the definition 5 to 6 authors. So everyone having a ultimately conclusion are the same to a financial position can be show the true and fair view or not. So everyone should be emphasized that the financial statement can be show a true and fair view or not. So ultimately the auditor can be obtain the evidence from the primary records. If the doubt is there, Spicer and Taylor can be just make that the information and explanation required. If suppose sometimes the audit the books of account can be maintained by the company, it may be some offering the explanation is required because the recording transactions may or may not be a reflect the true views, or may be possible the principal mistake can be done by the company. At that times the clarification is required whether how they should be record the transactions, what is the object behind of the recording the transaction. There are the so many reasons. And so the concrete of the all the definitions that they should be everyone author can be emphasized whether the financial statement can be reflect the true and for fair view, it can be verified by the auditors. So now we see that the objective of the audit. So objective, just we see the definitions on where we should be find out that the whether fairness, truthness, authentications. On that basis, auditor just not verify, but ultimately give the conclusions whether the financial statement can be reflect the true and fair view or not. It can be give the opinion. Auditor should be give the opinion. And that basis opinion, people those who are the user of the financial statement, maybe a shareholder of the company, board of the director of the company, creditor of the company, and government, income tax department, GST departments, and other department also, they should be emphasized that financial statement can be a reflect the true and fair view. So ultimately the object behind the auditings, the financial statement can be show the true and fair view or not. It can be a just make the verification by the auditors. Now other objectives, we should be see that there is a two categories of the objectives: primary objectives and secondary objectives. To primary objective, we see that to examine the accuracy of books of accounts. So what is the accuracy? So far as concerned, the accuracy, so far the arithmetical accuracy may be possible due to the wrong postings or due to the clerical mistakes or omission mistakes. Maybe a problem with the numerical calculations may be possible. Postings may be a wrong postings or wrong debiting and crediting, not follow the golden rules, and reportings what requirement, but the just posting is the wrong account, maybe debit to credit or vice versa. So it may be just when auditing can be performed, it may be possible that the just whatever the entry can be recorded and it should be just whether accurate or not. If suppose it's not accurate, the auditor can be just make the this representation of the management, so this account may be rectified if suppose the omissions there is a no fraud is there. And then when auditor just if find out that the ultimate there is a major mistakes, just he should be express opinion on the financials, maybe a unmodified reports or clean reports, or if suppose the fraud and a lot of mistakes noticed to the auditors should be express the adverse reports, disclaimer reports, and make the comment that the financial statement prepare not according to the principles, and it may be just making their own view. So user can be come to know that whether the problem is going on the company, so whether peoples can be believing on the auditor's financial statement audited by the chartered accountant or equivalent persons. Now second objective of the auditing is the detection and prevention of errors. So maybe possible that due to the audit is conducting on the company, and now it is a day it's compulsory for the companies to appointment of the auditors, or for the verification and authentication persons. So every company or every organization just auditing their financial statement. So it may be possible that is a moral check on the stops, and stop may be a just cautious into the mind, and they should be just know that if suppose fraud is maybe a occurs, maybe a fires, or may take the action by the management on them. That's why they should be a just morally and ethically work should be performed. Next is detection of the prevention of the fraud may be possible. Auditor can be alertness mind, very skillful persons, very well equipped knowledge and professional persons. He know that the weaknesses of the every organizations due to, and he should be use the judgment basis who matters where may the occurrence of the frauds. We should be see that the Satyam case, Enron case, worldwide level the fraud is continuously going on. So people's going the white crimes. So it is a just duty of the auditor make the cautious and take the discharging the duties to make the alertness and where the fraud is going on. And according to he should be they use the spectisms and whatever the guidelines issued by the governments and Institute of Chartered Accountant, and according to that he should be perform the audit and discharging the duty. So in future there is a no possible obligations come on the auditors to face the negligency. It may be if suppose the negligency is there under section 147, the auditor should be just fines and imprisonment also. So auditor always take the cautious performing the audits. Now we should be go for the importance of auditings. So first importance is detail overuse. So far as concerns when auditing is going on, nowadays what is the meaning of details? Means auditor is not just whatever the financial data is going on and just he should be audit. He should be take the detail overview what according to the objectives of the company they should be run the business or not, what is the planning of the company they should be make the provision or not. So everything he should be check the overall performance of the company according to the objective mentioned in the memorandums and as per the rules and regulation of articles of association, the every person can be do the works or not. Our next part is concerned with the detections and error and frauds. So earlier in the objective of the auditing we have to the discussion on the same part, but here we should be errors maybe clerical errors, omission errors, principal mistake is there, or fraud may be just fraud may be done by the management level peoples, may be a possible some higher level people also involved. So it may be a possibility what is the kind of the fraud is there. So auditor make the appropriate steps and to obtain the sufficient and appropriate evidence for the discharging the due to receive additional perspectives. So what is the meaning for the additional perspectives? So sometimes it may be possible that we just see that the company just nowadays a company can be doing the very kind of the different types of the manipulations and make the window dressing show the better positions. So what is the perspective where maybe a company causes the frauds or company going for the futures amalgamation of absorptions? What are the company's board of directors? He should be go for the minute books, and according to the he should be see that whether the properly all the things can be applied by the company. Improve the credit ratings when the company financial statement audited by the chartered accountant. So it may be possible that the third parties, that is the persons rely on the audit statement, that is shareholders, uh, generally the persons who are the giving loan lender of the company, maybe a financial institute, banks, and they should be see that okay financial audit is there, they should be see the what is the pictures of the debt, what is the they should be having a sound business or not, whether the financial capacity of the business in futures repayment the interest and loans, and due to that they should be make the credit become a more reliable. Why it is a become a rule means the first of all we see that the auditor is the independent person and independent mind, and he don't having any prejudice as and when he should be work on the company. So always auditor what he should be takes a more independent person and he should be give the authentication informations. He not a take any threat. He just whatever the expressing opinions, what is the state of affairs of the company, according to he should be make the opinions and give the reports. And next is the be certain where company is going. So nowadays the more important things, auditor just make the standard on auditing 570 going concerns, whether the parameters of the going concerns is this companies non-going concerns may be possible. So this is exception case of the COVID 2020, because may be possible some companies should be a halt their business, but it may give questions due to the this government guidelines. Maybe just a Ministry of Corporate Office make the guidelines regarding in these regards. So this is the exception case, but whether the really whatever the financial statement according to the just receive the additional parameter, we see that the company is a going concern means company is not halt their business, or in the coming days company is not just wind up the companies. Yes, now we see that take the example of Vodafone and Idea. Okay, due to the Geo, the company is just not making a profit making, and the business can be just amalgamate, and the business can be now did survive some extent levels. So company try to that how to survive. So financial indicator can be a show that in coming days the business is going concern or not. Auditor can be give the other information report into their audit reports, and on that basis the people those who are go through the report, they come to know that what is the exact position, that is the promote the accountability. Yes, always measures and keep the books of accounts as per the rules and regulations, as per Indian accounting standards or IFRS, International Financial Reporting System. It is always the duty on the company's management, and they are responsible first of all. If suppose one question may be, if suppose they not maintain the books of account, why? So there is a one provision under section 133. If suppose the company management laggings deliberately at that times, it noticed to the auditors, they not adopted the accounting standard or Indian accounting standard or IFRS, he should be make the reports, and as per the Companies Act 2030 they are made responsible fines for the deviation of the accountings, and auditors should be make such a report into their audit reports. Yes, the company is a deviation from the accounting. As a result of deviations, company incur the loss or profit, and window dressing can be possible into the company. So auditors just make the things into the their reports. So it is always responsible to the company's management to adopt the accurate and authenticate information so far as concern the accountings. So auditors not make the such adverse comment on it. Thank you everyone's